real estate as a pack, which has done very well. Now we've seen a bit of a cool off. Let's try and see what trends are playing out, especially in the Mumbai metropolitan market. That is one. But Arkade Developers in particular, because the stock price was at one point of time at 220 rupees a piece. You've seen quite a fall in the stock price, and in the last 3 to 4 months especially, we've seen a very good bounce back from those 100 levels. Stock price has bounced back very well to around 138, so which is like a 40% upside we've seen from those lows. We'll try and kind of understand this story better, because Q4, what happened was the numbers took a knock of around 182 odd crore because of an acquisition that they made of land, as a result of which they had to recognize a write-off, which they did, due to which you saw knock-on profitability for FY26. Probably part of the reason why the markets didn't take that too well. We'll try and get a better understanding of what's playing out with Amit in just a few minutes. But first off, let's start off with giving you a perspective on Arkade. This was incorporated in 1986, so it's a legacy business. It's a Mumbai-based real estate developer that is housed inside this. It's a promoter-driven company, largely market cap around 2,800 crore. And that's the sum and substance. Let's start with broadly what it does. Residential buildings, so they do greenfield projects, which is they acquire land and thereafter construct. A society redevelopment also that they do. So both of those. Then you've got retail and commercial as well, to some extent, which they do, which is a small part of their business. Facility management as well as home loan financing and facilitation. Just some of the other smaller ancillary pieces that they do in their business. In terms of completed projects, you want to look at this as a developer and really nothing else. From a larger business standpoint, the material part of the business is the developer business. They've completed 14 projects as of date across South Mumbai, Western suburbs and Eastern suburbs. The ongoing projects, they have quite a few. They've got Eden in Malad, which is slated for completion in March 2026. There's Pearl in Ville Parle, which is slated phase 1 in December 26, phase 2 in June 27. There's Vistas, Views and Evoke, all three in Goregaon, which have various timelines, but largely December 2027. And then there's Evoke. The Evoke timeline is June 2029, if I recall that right. Rare in Bhandup, the timeline is December 2028. And there's Nest in Mulund, timeline again, June 2027. A large part of the project pipeline gets completed in that critical Q1 FY28 quarter. We've seen, based on the last slide as well as this one, that you can see that the completion timelines in June 2027, there are quite a few projects up there. The other piece is, of course, one is the ongoing, and let's quickly look at the ongoing. In terms of saleable area, it's around 8.36 lakh square feet in terms of saleable area. But the ongoing projects, sold is approximately 1,464 crore in INR terms. The unsold inventory is around 848 crore. Revenue is recognized of 842 crore and unrecognized in 1470. So over the next maybe couple of years, you'll see that 1470 crore start to get recognized in the profit and loss account in terms of top line. Upcoming projects, there are 12 projects which are coming up. Carpet area of around 42.5 lakh square feet. So there's a very large pipeline of projects which Arkade has. The turnover of the combined 12 projects is going to be approximately 12,800 crore. That's a large turnover for a 2,500, 2,600 crore kind of market cap kind of company. Of course, we'll try and understand what the run rate of execution is going to look like and what the next 3 to 4 years will look like. How quickly can they execute and how quickly can they launch also, because this is still awaiting launch as well. In terms of business model, we'll keep this simple to try to explain this to viewers. They buy land, they sign development agreements with societies. They use the advances that they get upon launch to basically ensure that the development happens through the cash flow that comes in from the launch. They stagger their cash flow also accordingly. They stagger their collections also accordingly, based on the progress that plays out on the development. And thereafter, they use percentage of completion method for accounting purposes for their revenue recognition. They traditionally have kept debt low, so don't be surprised if the debt looks decently low. That's broadly how Arkade shapes up. Now, let me quickly take you through the P&L and the financials. the P&L, the top line has grown at a fairly healthy clip of 55% of a very, very low base of FY22. We're currently sitting at around 800 crore. You'll continue to see this kind of growth, especially for FY27. The guidance is 1,000 to 1,200 on the top line. So around 25 to maybe even 50% on the upside could well be the kind of growth that we could see in FY27. In terms of EBITDA, again, it's grown largely in line with the revenue, 47% on the EBITDA number. What we've seen on PAT is a sharp cool-off in FY26, and that is because of that one-time knock of around 180 crore that the company has taken. But that's largely, predominantly because of that Filmistan acquisition. And we'll get a perspective straight from Amit, a far better way to kind of understand what was the rationale behind taking that knock straight up in FY26 and what the accounting requirement was. But broadly, that's the profitability. But please factor that knock because, X that knock, the PAT would be higher. Now, let me take you through the margin trajectory. The margins have largely been in the 23 to 30% kind of band, the lowest being in FY26. The guidance is 18 to 20% on PAT. Really, that's the guidance which the management has given. So broadly, once you have the revenue, and 18 to 20% on PAT is what the guidance is. In terms of, and while we are looking at operating metrics, we also want to quickly look at pre-sales, collections, and area in square feet sold. And when you're looking at those very healthy numbers in terms of growth coming your way, collections hasn't picked up as much as pre-sales and area sold. But broadly, collections was in any case decent even in FY25. So no concerns per se. Broadly, these numbers look decent as well. Let me look at the balance sheet now. And when you're looking at the balance sheet, you've got an equity base of around 880 crores. So this one trades at around 2.5 times book maybe. You're looking at, or maybe 3 times book, I beg your pardon. You're looking at a borrowing number of around 100 crores. So fairly decent, well controlled in terms of the borrowing number. Cash and bank balance of around 25 crore is what the company sits on. Cash flows, generally not something that we look at for real estate developers, but we'll share the screenshot with you nonetheless. Return ratios, around 19 to 41% is what the ROC is, and therefore very, very healthy in that sense. FY26 was the weakest year in terms of ROC. Outside of that, you've seen very, very healthy ROC numbers, no concerns there. Shareholding pattern, 71% owned by the promoters, large skin in the game for promoters, no FIDI interest because, you've got just 30% of free float and 30% would be around 600 crore. Not so sure whether FIDIs would want to participate with that kind of a small free float. And then you've got the public which holds the balance. One thing you want to quickly also look at is there's a sharp lowering of the number of shareholders. FY24, there were 83,000 shareholders in the company, 62,000 in March 2025, 61,000 in March 2026. Interest certainly seems to be waning from a retail investor standpoint. That's just something I want to park with you. Valuations, well, currently we've just pulled the numbers forward for 1,100 crore FY27, but thereafter just a 20% growth clip, which is the lower end of the guidance which the management has given. 18% of PAT margin, that's again the lower end of the guidance which the management has given. Net profit is therefore derived based on both of those assumptions, and then you have the PE in front of you. Very quickly will become 1 year forward, single-digit PE, maybe a year and a half from now, if at all things were to go your way. Also, Filmistan, which is the 182 crore or the 182 crore related write-off was in relation to Filmistan, which is the acquisition which Arkade has made. And now that 182 crore, I'll just quickly give you a flavor of what this gives. 3,500 crore in terms of top line is what this will give. So on the 12,800 crore kind of overall pipeline, 3,500 crore will be Filmistan. And out of that, Filmistan alone will give you 1,000 to 1,200 crore PAT as per management. So the PAT will be much stronger than many of their projects. And if that were to come through, FY28, FY29, FY27 end is the launch. So you'll start to see numbers start to trickle through FY28 and FY29. You might see these numbers change. That's just the small caveat that I wanted to give before I go across to Amit Jain. He's Chairman and Managing Director at Arkade Developers, joining us this afternoon. Amit, great having you. It's been a while, so good having you and good having this conversation. Let me first start off, Amit, by asking you that this 182 crore write-off that you've taken in FY26, talk to us about what is the nature of the write-off. Just explain that for our viewers, if you can.
So the nature of transaction was company transfer
Yes.
while acquiring Filmistan. Like a part of the transaction was in form of company transfer, and the company got merged with Arkade Developers, and we had to write off the acquisition cost. It is in a way an efficient tax planning also, you can say, and the profit is deferred. The profit which is written off for this year will be subsequently compensated in coming times.
Yeah, so I mean, basically what you're trying to say is you could have deferred the 182 crore in terms of apportion it over the revenue or over how the revenue would be recognized. Was that at all possible, or was that not possible from an accounting standpoint?
From the accounting standpoint, we took the call to write it off this year only. And
understood.
Yeah.
Understood. And basically, Filmistan will bring you 3,500 crore of top line at 1,000 to 1,200 crore PAT. Talk to us about the timeline of that. How does that get recognized? Because that will be a marquee project.
Filmistan, we are planning to launch in the last quarter of this financial year. And it's a high profit, high margin project. The acquisition is quite a value deal. And the enterprise value that we are expecting from the sales of this project is going to be very much on the higher side, because it's an ultra premium project and there is no project of similar type in the immediate area, in the immediate micro market.
And timelines, Amit, if you can give us a sense of revenue recognition for this.
So you can consider a timeline of 4 years to recognize a revenue of 3,500 plus crore from one project itself, starting say March 27 onwards.
Okay, so March 2027 onwards. So it is FY28.
Yeah, FY20.
FY28, and
yes.
Will it be linear in terms of revenue recognition, or will the revenues be back-ended?
It will be like on a percentage completion method. We recognize the figures, and it will be more towards back-ended because it's a premium project. So in order to get premium rates, we'll be waiting for the amenities and all the project to be ready. That is when we make much more premium in terms of rate realization.
So FY28, FY29, FY30, is that how we see the Filmistan journey come through in terms of numbers on your PNL?
30 and 31, 4 years.
Oh, 31 as well. So over 4-year period.
Yes.
Understood.
And other than Filmistan, we have a land parcel in Thane as well, which we are launching in the third quarter of this financial year, towards the calendar year end. That also is going to be a very profitable project, and it's having an estimated top line of around 2,000 crore.
Okay, but there the margins will. But so there the margins will largely be 25%, because that is again something you've acquired.
It's a greenfield project. It's a 6+ acre greenfield project, and it's a very premium project, and we are very bullish about the sale velocity of the sale. The margins are good. The margins are much better than what you have in redevelopment projects.
Correct. Yes, and you believe that the timeline for that also will be 3 or 4 years? Is that what we can expect in terms of a clip?
4 years, yeah. And it is more certain with what approvals and the construction work of Experience Center and all is started, and the marketing team is working for the launch of the project.
Sure. Amit, is there a shift in strategy? You've always done asset light. With Filmistan and with certain other projects, you start to buy parcels. Is there a shift in strategy, or is it a cash flow based decision?
No, cash flow based decision. We've always been into land projects also. We've always had this fine balance of land projects and redevelopment projects. So the major part of the capital deployment is towards land acquisition, and the asset light side is towards redevelopment side. So currently the major cash for deployed for land projects is for Filmistan and Thane. And other than that, we have a good lineup, very good lineup of redevelopment projects.
And so out of the total that you have in terms of execution, you've got around 14 to 15,000 crore ongoing plus the launches and the potential, right? So I'm just adding both of those.
Yes.
So if I look at the full 15,000 crore, how much of that would you say would be redevelopment versus greenfield?
So 3,500 is Filmistan plus 2,000 of Thane, so 5,500. So say around 6,500, 7,000 will be greenfield and around 7,500, 8,000 would be redevelopment. So it's a fine balance of say 45% land side and 55% redevelopment, or say 50-50.
Yeah, and your redevelopment margins are PAT margins are around 17 to 19%, if I've understood it right, and your greenfield margins are around 25 to 27%.
Yes.
Any reason why you guide for a PAT margin of 18 to 20%? If that's the split, I'm just trying to get a sense. The PAT margin should be much ahead of 20%.
No, but then we are being conservative. We always believe in promising lesser or committing lesser and delivering more. And also going forward, the margins will squeeze a little as the scale goes up, there has been a factor of rate appreciation in the past projects, which may not be applicable going forward.
Any reason why you're skeptical?
Because currently the markets are, in terms of rates, they are flat. We are not seeing any rate appreciation currently.
And you expect that to continue in terms of sales momentum, in terms of at the current rate, sales momentum should sustain, you believe?
We expect that to continue broadly. In exceptional cases like the Thane project, where there is a possibility of upside, or maybe the Goregaon project, where it's an ultra premium, we see possibility of upside. Other than that, in the redevelopment projects, we are not very bullish in terms of rate appreciation.
Right. How much of an upside can Thane give you in terms of pricing? Broadly, I mean, you're not factoring that in your 2,000 crore GDV. That's not what I'm alluding to. But what could that upside be?
We can expect an upside of around 20 to 25% from the launch rates till the time of possession.
And you've not factored that in the 2,000 crore which you've given in terms of GDV number?
We factored a part of it, not fully.
A part of it.
Yeah.
Understood. Debt, how do you use that, or do you still, are you still in the camp or of the philosophy that debt should be used in a very small fashion in the business? Has that at all changed?
We are conservative. You can call us a bit old school and conservative, both safe. So we are sensitive towards debt. But exceptionally, if you get some very good opportunity, we can take an exception to increase the debt from the current percentage. But nothing drastic, I would say.
Okay. And FY27, what's the launch pipeline looking like? FY27, FY28, if you can give us the color on these 2 years. My understanding, again, you can correct me if I'm wrong, around 5 to 6,000 crore is the launch pipeline for FY27. But if you can give us the combined pipeline for both FY27 and FY28.
So 27, as I mentioned, we are launching the Thane project, and then there is a redevelopment project in Malad that we are launching. There is also a project in Santa Cruz West that we are launching. So in FY27, there is a visibility of launch of 3,000 crore worth of project. And next year, we are launching Filmistan and a couple of other redevelopment projects. Next year is going to be very bullish. We have a visibility of launch of projects worth 5,000 crore.
Okay, so 5,000 crore next year.
This year, yeah.
And 3,000 crore this year. So total of 8,000 between this year and next year.
This year and next year.
Understood. And what's the pre-sales expected to look like in FY27, and what's the collections expected to look like? there's been a healthy uptick. Can that sustain 25-30% kind of growth?
This year we are expecting a pre-sales of around 1,200 crore, including the Thane project, and maybe a collection of 1,000 crore, which was around 700 range last year. So we are expecting completion. Any reason?
No, please go ahead. Complete your point.
No, so we are expecting completion of few projects, and which will culminate into collection from possession stage and all. So a visibility of 1,000 crore collection, 1,200 crore pre-sales.
So how should one look at collections? Will it be largely a function of the top line as well? It'll largely be in around the top line?
Collection is linked to the execution of projects. So as I mentioned, we are launching Thane. So out of 1,200 crore, say 400 crore will be from, the 400 crore pre-sales is from Thane project, which will just start. So that may not have a big collection from Thane project. So keeping aside the 400, whatever rest 800 crore sales is from the ongoing projects that will lead into, say, full or substantial payment, plus the due from the earlier sold things. So that is how we look at a visibility of 1,000 crore collection in 1,200 crore pre-sales.
And how should one look at the revenue growth clip? You've guided for, again, 20 to 25% revenue growth. We, for our valuations, viewers, for your perspective, have factored in a 20% growth on a 1,100 crore base for FY27. How likely are you to clock that 1,100 crore in terms of top line? Give us some color. And thereafter, what should the growth look like maybe for the next 2 to 3 years, given that you've got all these marquee launches coming your way, right? You've got Thane, you've got Filmistan.
In next 2 years, there will be a spike in growth, which may be much more than what an average will be. But over a long term, like it will average out, and that is why we always, as I said, like indicate lesser and deliver more. So we indicate around 20% of growth year-on-year basis. But because of the Thane and Filmistan launch, which are much bigger than the average projects that we have, there will be a spike in numbers for 2 years.
What will that spike be, Amit? Quantify it for us.
No. Let us see as and when we launch the project. Let the work speak.
Okay. And what about the PAT margin, Amit? What should that look like maybe for the next couple of years, if you can give us some color? Because there are these one-offs, right? Where you've got these large projects coming in, marquee projects, the Thane one, the Filmistan one. What should happen to PAT margin? Should there be a meaningful uptake at least for the next 2 to 3 years?
No, but then as I mentioned, the margins in development are much thinner, so it will average out. And for now, we are hopeful of 20% PAT margins for sure.
Okay, 20% PAT margin for sure. And thereafter, probably towards FY29 and FY30, you might see a bit of a uptick on that number, just given the fact that you'll start to see that Thane and Filmistan reflect on your PAT number.
But there will also be redevelopment projects with lesser margin, as I said.
Fair point. Okay, Amit, thank you so much for coming in and giving us that perspective. We'll let you go.
Thank you.
And viewers, that's all the time we have. Gives you some color. Trading at 13 times 1 year forward, at least at this point, based on the guidance given. Broadly, that's how we're seeing this, but could well become single digit 2 to 3 years from now, given the fact that growth may likely sustain. Completely timed out on this edition of All About Your Company. Thanks so much for tuning in.